The many forms that cryptocurrencies may take. Bitcoin is the most well-known cryptocurrency and also the one that has the largest market capitalization. However, in order to lower risk overall, a diversified portfolio would contain a number of different coins to choose from. Let's go through a few of them now, shall we? Payment coins. It is difficult to come across new coins that are mostly used for making payments in today's market. However, if you go back to when cryptocurrencies were first being developed, the majority of the projects that were being developed were mechanisms to transfer wealth. The most well-known example is Bitcoin. However, we also have Ripple, XRP, Bitcoin Cash, BCH, and Litecoin, LTC, amongst other cryptocurrencies. These coins belong to the very first generation of cryptocurrencies, which were in circulation before Ethereum and the development of smart contracts. Stablecoins. A stablecoin is a digital currency that aims to maintain its value relative to a base asset, such as a traditional currency or precious metal. For instance, BUSD pegs the value of the United States dollar to reserves that are equal in value to one another. The Pax Gold, PAXG, cryptocurrency utilizes the same mechanism, but it pegs the value of each coin to the price of 1 fine troy ounce of gold that is kept in reserves. Stablecoins live true to their name by providing stability, despite the fact that they may not necessarily produce huge returns. Due to the volatile nature of the cryptocurrency market, it is beneficial to have investments in your portfolio that maintain their worth. If the stablecoin is pegged to something that is not part of the cryptocurrency ecosystem, then it should be unaffected by a decline in the cryptocurrency market. To ensure that your gains are preserved in the event that you decide to withdraw tokens from a project, you may quickly shift them into a dollar-backed stablecoin such as BUSD. Trading for a stablecoin is a considerably quicker procedure than converting cryptocurrency into fiat currency. Security tokens. A security token, in the same way that conventional securities do, may stand for a variety of things. It could take the form of shares in a corporation, a bond issued by a project, or even the power to vote in the project. Since securities have been successfully digitized and placed on the blockchain, it can be deduced that they are subject to the majority of the same rules. Because of this, local authorities are responsible for overseeing the issuing of security tokens, which also requires them to go through a legal procedure beforehand. Utility tokens. A utility token performs the function of a key to access a certain service or product. Utility tokens include Bitcoin Cash, BNB, and Ethereum, ETH, for instance. When dealing with decentralized apps, one of the many uses for them is to pay the transaction fees that are associated with such interactions, dApps. In order to generate funding via an initial coin offering, several projects choose to create their own utility tokens. In theory, the value of the token ought to have a direct relationship to the value of the service it provides. Governance tokens. Having a governance token gives you the ability to vote on a project and even gives you a cut of the money generated by that project. These tokens may most likely be found on decentralized finance, DeFi, platforms such as PancakeSwap, Uniswap, or SushiSwap. The value of a governance token, much like the value of a utility token, is directly proportional to the performance of the underlying project. Financial crypto goods. Having a variety of coins in one's possession is not the only way to establish a portfolio. Your portfolio may benefit from the addition of financial crypto products due to their ability to help diversify it. Consider it more along the lines of investing in government bonds, exchange-traded funds, or mutual funds as opposed to just owning shares. Across the many different blockchains and decentralized applications, dApps, there is an enormous variety of merchandise in which you may invest. Binance provides a wide range of financial services and goods, in case you are unfamiliar with the subject. You may examine them by going to the Finance area of your Binance account once you have logged in. Because each of these items has a unique amount of risk, it is imperative that you fully comprehend how they operate before you put yourself in harm's way. How to build a crypto portfolio that is diversified and well-balanced. Every potential investor or trader in crypto will have their own thoughts about the components that constitute a diversified and well-balanced cryptocurrency portfolio. However, there are several basic guidelines that are important to keep in mind. 1. Separate your assets into high, medium, and low-risk categories, and assign each one the proper amount of weight in your portfolio. A portfolio that is not balanced in any way, shape, or form if it contains a significant component of high-risk assets. It could have the potential to bring you larger gains, but it might also lead you to suffer enormous losses. Your risk profile is the most important factor in determining what's best for you, but you should always have a mix. 2. If you want to help offer liquidity for your portfolio, you might think about owning some stablecoins. You may swiftly and cheaply lock in gains or exit a position with the aid of stablecoins, which are the core of many decentralized finance systems. 3. If necessary, rebalance your investment portfolio. The crypto market is very unpredictable, and as a result, you should adapt your strategy to reflect the most recent developments. 4. Ensure that no one component of your portfolio receives an excessive amount of additional cash by properly allocating it. When you've just earned significant profits from a single coin, the temptation to invest even more capital in that coin might be strong. Avoid letting your greed get in the way, and instead, consider how you may more profitably invest the money. 5. Carry out your own independent research. This time-tested piece of guidance is unrivaled in its usefulness. Since it is your own money that you are investing, you shouldn't put all of your faith in the guidance of other people. 6. You should never invest more money than you can afford to lose. If you're feeling anxious about your portfolio, it's not balanced the way it should be. Your roles shouldn't put you in a situation where you face significant repercussions in the event that everything goes horribly wrong. Trackers for cryptocurrency portfolios. You may monitor the changes in the value of your holdings with the use of a tool or service known as a portfolio tracker. Tracking your progress and comparing your present allocation to your long-term objectives is something that is both possible and easy to do. The following are some instances that might be worth your consideration. CoinMarketCap. CoinMarketCap is a price tracker that has become quite popular and has created its very own portfolio function. The portfolio tracker is free to use and can be accessed on mobile and desktop devices alike. Because it does not link to your wallet or exchange, the portfolio tracker requires that your holdings be entered by hand in order for you to utilize it. In order to keep an exact record of your gains, you also have the opportunity to enter the prices at which you first purchased the asset. CoinGecko. The monitoring of cryptocurrency prices is where CoinGecko first made its name, but the website now offers a portfolio price feature. It does not cost anything to use, and you may access it on any mobile or desktop browser. It is recommended that you give the tracker a go even if you are already a frequent user of CoinGecko. The mobile portfolio known as Delta gives you the ability to keep tabs on both your crypto holdings and your regular assets at the same time. It is possible to connect with 20 different exchanges and a number of different wallets, one of which is Binance. There is a free version as well as a premium version, however, you are unable to trade inside the app itself. Final thoughts. A significant portion of the success of the cryptocurrency market is tied to the state of Bitcoin. However, this is not a valid excuse for not maintaining a diversified portfolio. Diversified crypto investments may be able to mitigate some of the losses that arise as a result of a drop in Bitcoin's price, which is why it is always a good idea to have some level of diversification. Keep in mind that just having a variety of coins is not enough to create a well-balanced portfolio. When it comes to developing a portfolio that is proportionate to the amount of risk you are willing to take, a little bit of planning may go a long way. Thank you for watching and don't forget to watch part 1.